Welcome to the Deep Dive, where we take your source material and really distill it into the crucial insights you need. We cut through the noise to get straight to those aha moments. We're here to give you that shortcut to being, well, truly well-informed. Today, we're diving deep into a company that's been making some pretty big waves in the digital finance world. Fresh off its IPO, Circle Internet Group, you'll know it by its ticker, CRCL.
Exactly. And our mission today is really to unpack everything essential about Circle. We'll look at its core business, its recent financial performance, the intense market reactions to its public listing, and those wildly contrasting views on its future. Ultimately, we want to help you understand the strengths that have investors excited, but also the significant risks that some analysts are flagging and, well, what it all means for digital payments overall.
Yeah, we've got a fascinating stack of sources here. It covers everything from Circle's recent listing to the ongoing debate about its valuation and its place in the market. So let's jump right into the specifics of this digital currency pioneer. Okay, so to really understand Circle's journey, we first need to lay the groundwork. Who exactly are they, and what's this grand vision they're chasing in financial tech that has everyone talking?
Right. So Circle Internet Group is a global financial technology enterprise. Their main mission, it's quite ambitious actually, to fully integrate blockchain technology and stablecoins into, well, everyday finance, especially for payments and global commerce. They're based in New York, and they're probably best known for issuing and operating two key stablecoins, USDC, that's pegged to the US dollar.
Right, USDC.
And EURC, which is pegged to the euro. Their infrastructure, it already supports global remittances and payments across, I think it's over 185 countries now. Pretty impressive reach.
Okay, and how do they actually make their money? Especially when you're dealing with stablecoins that are, by definition, pegged to traditional currencies. They don't fluctuate like other crypto assets, so where's the profit? That seems like the million-dollar question for a lot of people.
Yeah, that's a crucial point, and it's where their business model becomes very clear. Over 95%, that's 95% of their total revenue, comes directly from the interest earned on the reserves backing their stablecoins. So think of it like this. When you hold a USDC, Circle holds $1 in reserves somewhere. They earn interest on those reserves.
Okay.
For example, their 2024 revenue hit $1.68 billion, and that was largely driven by this interest income.
Huh. That revenue model, it sounds remarkably simple, almost too good to be true. Are there hidden complexities or potential vulnerabilities in relying so heavily on just interest from reserves? Or does it really mean they have a remarkably solid financial footing?
Well, it does suggest remarkable financial stability, actually. Financially, they show incredibly strong cash generation. Their reported return on equity, or ROE, was 66.25%.
Wow, 66%.
Yeah. And just to put that in perspective, a healthy ROE for many established companies is often, maybe 10-20%, so 66.25%. That signals exceptional efficiency in generating profit from shareholder equity. And you combine that with their very low debt-to-equity ratio, typically around 5%. It really paints a picture of robust financial health.
Okay, so beyond the core business, what's really captured the market recently is Circle's IPO.
Yeah.
How's that journey been for their stock since going public?
Right, the IPO. So Circle went public on the New York Stock Exchange, ticker CRCL, back in June 2025. Their IPO criteria set the valuation at roughly $6.9 billion, with shares priced initially at $31. But then immediately after listing, the stock saw this dramatic surge. It climbed really rapidly to over $200 in a very short period.
Over $200 from $31.
Exactly. It positioned it as a notable emerging growth stock, often doubling its value right after listing, drew a lot of attention.
But we've definitely seen some turbulence since that initial explosion, haven't we? What's been the market's reaction more recently, after the sort of IPO honeymoon period?
That's correct. Yeah, while there's still significant growth expectation baked in, some analysts have recently voiced concerns about valuation overheating.
Okay.
For instance, just on July 22nd, the stock actually saw an 8% plus drop. That followed downgrades to sell and target price reductions from some analysts. They adjusted their forecasts down from highs like $205 down to $130. So quite a shift in perspective for some.
So yeah, we're seeing these wildly divergent views, buy ratings, sell ratings. Beyond just the valuation numbers, what are the kind of core philosophical differences maybe between analysts that lead to such a dramatic split in their outlooks?
That divergence is really key here, because despite these recent adjustments and the cautionary notes, the underlying excitement around Circle, it remains incredibly high. So what's driving this optimism? What are the key strengths that make some investors still see it as a potential game changer for future payment infrastructure?
Right. What's the bull case?
Well, there are several pretty powerful positive drivers. First, regulatory clarity. That's been a massive boost. Both the US with the passage of the Genius Act in 2025 and Europe with its MiCA regulation have moved to formally legitimize stablecoins.
Ah, so that legitimacy helps with the big players.
Exactly. It's not just about legality, it gives them a clear operational framework. That boosts Circle's global standing and, crucially, its credibility with large financial institutions. They need that certainty to adopt new tech. Second, USDC itself is a powerhouse. It's the world's second largest stablecoin, right? And its real-world usage is just expanding rapidly. Payments, remittances, B2B infrastructure for financial institutions. It's not just a digital asset anymore. It's becoming a widely adopted payment rail.
That sounds like the stablecoin market isn't just growing, it's absolutely exploding. Can you put the scale into perspective for us?
Oh, absolutely. The stablecoin market is definitely a high-growth sector. Projected average annual growth rate around 28%.
28%.
Yeah. But here's what's really eye-opening. In 2024, the total payment volume processed via stablecoins actually surpassed the combined total of Visa and MasterCard.
Wait, really? Surpassed Visa and MasterCard combined?
Combined, yeah. It's not just growth, it's like a seismic shift. It indicates stablecoins are rapidly going mainstream, and Circle is, well, perfectly positioned to capitalize on that trend.
Okay, wow.
Third point, Circle has been strategically forming significant corporate partnerships. They're collaborating with large payment companies like Pfizer on new stablecoin projects. There's one called FIUSD, which is a new stablecoin designed specifically to accelerate real-world payment links for financial institutions using Pfizer's massive network. And they also have strategic alliances with major exchanges like Coinbase and Binance. Very important relationships.
And it also seems management has a very high opinion of their own future value. Didn't they turn down an acquisition offer? What does that tell us?
They did indeed. They notably rejected an acquisition offer from Ripple. This was back in April, May 2025. The offer was valued somewhere between $4 or $5 billion. Okay.
They viewed it as a significant undervaluation. That signals their profound confidence in Circle's much higher future potential. It's a strong statement, really.
Yeah, definitely.
And adding to this, Adam Selipsky, the former CEO of AWS, Amazon Web Services.
Oh, yeah, a big name.
He recently joined their board of directors. That move is seen as combining large-scale internet infrastructure experience with Circle's platform. It signals, further expansion and the kind of long-term vision they're building towards.
Okay. This all sounds very positive, but it raises an important question. Given the recent stock volatility and these lofty expectations, what are the significant risks, the cautionary factors for Circle that investors really need to be aware of?
Right, the flip side. The primary concern for many analysts is definitely valuation overheating. Despite the strong fundamentals we talked about, key metrics like its price-to-sales ratio, the PS, is at 74.4x, and the price-to-earnings, PE ratio, 283x.
Oh, 283. Yeah. Both are substantially higher than industry and market averages. What this tells us is that investors are pricing in an enormous amount of future growth.
Right.
It potentially creates a situation where any misstep, any slight disappointment could lead to significant corrections. It's almost like, buying a house in a crazy bidding war. The excitement's high, but are you paying for the actual value or just the hype?
That's a good analogy.
Another major risk is its high sensitivity to interest rates. We said over 95% of its revenue comes from interest on reserves, right? So any significant drop in global interest rates could dramatically impact its profitability. It's kind of a double-edged sword. High rates are great for them now, but low rates would be a real challenge.
Okay, makes sense.
And then we also need to consider increasing competition. Starting later this year, latter half of 2025, traditional banks and other big fintech players, think PayPal, JP Morgan, they're expected to launch their own stablecoins.
Yeah, okay, so the giants are waking up.
Exactly. This could definitely lead to market share erosion and directly impact Circle's growth trajectory and profitability.
So it's clearly not just about what Circle does internally. It's also about the broader economic wins and the competitive landscape. What about the immediate stock performance risks?
Precisely. And given that rapid surge right after the IPO, there's just an inherent risk of short-term price adjustments and volatility. It went up so fast. Some analysts have already pointed to that sell the news phenomenon. Even after positive regulatory announcements, sometimes the stock dips as early investors decide to take profits.
Right, classic market behavior.
Yeah. And it's also worth noting, Circle does not pay dividends. all profits are reinvested back into the company for growth. So this focus on growth, coupled with the high expectations, can make it challenging, even for seasoned analysts, to pin down a stable, long-term fair value.
Okay, so connecting all these dots then. What does this all mean for someone trying to figure out Circle's future? We've seen analyst targets ranging from, what, a conservative $80 up to an optimistic $250. Is that higher $250 target realistic for, say, year-end 2025?
Well, based on the analyst consensus right now for year-end 2025, the target price range is generally seen between $204 and $250. Some optimists definitely see potential for $250, but the conservatives, they continue to flag those short-term overheating risks and potential adjustments, with some offering targets as low as $130, as we mentioned.
So still quite a spread.
Definitely. Now, for a long-term strategic investment reaching $250 or perhaps even higher, some are mentioning $300, $500 plus long-term. That's considered within a realistic range by many bullish analysts. But, and it's a big but, it absolutely comes with significant caveats, largely around those risks we just discussed: valuation, interest rates, competition.
So what key indicators should you, our listener, be watching for if you're trying to track Circle's trajectory in the coming months? What are the signals to pay attention to?
Okay, the immediate focus for the market will definitely be Circle's Q2 2025 financial results. Those are scheduled for release on August 12th. That will give critical updates on their actual performance versus expectation.
Right, the numbers.
Exactly. Beyond that, closely monitoring global regulatory developments is key, especially how stablecoin rules evolve across different major jurisdictions. And of course, keep an eye on announcements regarding new major competitors entering the stablecoin market. That will be crucial.
Okay, so this deep dive into Circle, it really reveals a company right at the forefront of digital finance. Incredible growth potential, clearly driven by a booming market and those strong regulatory tailwinds we talked about. Yet, as we've explored, it's also navigating some pretty significant challenges: at very high valuation, its sensitivity to interest rates, and the looming threat of traditional finance players finally entering its core market. Ultimately, for you, the learner, the question becomes, how do you weigh that immense promise of a potential game changer, a company that could truly redefine global payments, against the very real and immediate risks? Market volatility, a business model heavily reliant on essentially one revenue stream. It's a fascinating tightrope walk in the world of fintech, isn't it? Thank you for joining us for this deep dive. Keep digging, keep learning, and we'll be here next time to help you make sense of what truly matters.